Welcome back to Freedom Finance, another episode with your boy here, Lanny. And today we're going to actually dive into two things that I buy that have no relation to the stock market, not dividend stocks, not dividend ETFs, but two investments, alternative investments that I buy every single month. And I'm going to talk about what percent of my net worth it is, how much am I investing, how much is it worth, and when I think you could start considering these alternative investments. So grab your beer, grab your coffee. Let's dive into these two alternative assets. Let's get it. So what exactly are these two alternative investments? Could it be two PSA 10 cards that I own? You know, there's the one big guy that everybody wants right now for some reason on eBay and Mercari. And here's another beaut, a card that I pulled over 23 plus years ago, about 25 years ago, that I got graded a nice PSA 10. Good old MJ there. No. We're not talking about PSA 10 cards. We're not talking about basketball, Pokemon cards, or anything like that. We're actually going to talk about two real alternative asset classes, even though those are pretty cool investments as a hobby. Maybe if you're really involved in the scene from a collection and saleability standpoint, but we're not going to be talking about that. Everybody does know that I primarily, the majority of my investments go into dividend stocks and dividend ETFs. You know, dividend aristocrats, dividend kings, dividend growth stocks. And my favorite dividend ETFs, obviously VYM, and then I go into VOO and VIG. Every single day essentially on those two, and then VYM weekly. But I do invest into two alternative assets every single month. One that you already know about because I've showed some videos on it. Another one I haven't really talked too much about. So the two alternative investments that I'm buying every single month, and I'm telling you about it and why I'm doing it, how much, how often, and when I think you should, really comes down to two asset classes that are hard to obtain unless you're actually in the industry, own the physical asset, or are involved in the industry itself. So the first one is Fundrise. Everybody may know Fundrise. Those that don't, it's an online, I'll call it an online platform that really helps you with real estate investing. And it's really about crowdfunding, pooling assets, and then buying real estate properties, whether that's through equity ownership or through a borrowing arrangement with the builder or owner. In turn, you get appreciation on the asset, and I do it for this supplemental or dividend income, another passive income stream for me. So that's Fundrise. Been doing that since February of 2019 here. I've been buying that every single month. The second asset class, though, goes into the private equity space, the startup seed stage. We're talking about my sweater investments. Yes, the word sweater, just like the shirt or top that you wear during the colder winter months. The company's called Sweater, and really they allow unaccredited investors to get a piece of that startup through a private equity type of ownership. And I've been investing with them for pretty much over a year now, and I invest every single month. Again, those are two spaces that I don't own physical rental or investment property real estate. So I do that with Fundrise. I don't work or am involved in the private equity space. So I use Sweater to drive that vehicle for me as part of my net worth and balance sheet. Why do I invest in these two alternative assets? First with Fundrise, to me, it's fairly easy. I didn't want to be a landlord or own properties during this stage right now in my life. And back at the time in 2019, Fundrise offered me a chance to be exposed more to real estate than just a real estate investment trust that's publicly traded. Also, it's a different way to own real estate from owning real estate. And that's what they do best at, and they have billions under management, and that's how Fundrise really started. Really was just in the real estate realm. We'll have another video about this innovation fund that they have, but I'm not doing that. I'm really only focused with Fundrise in that real estate arm that they do and that they really started with. Again, I wanted to get a piece of the private equity space. Didn't want to expose myself too much from an overall percent of my pie, so that's why Sweater came in. They've been recommended by a few people that I know, as well as some other, we'll call them influencers online that really talked highly of them. And plus, their team seems very down to earth and experienced within their backgrounds and industries, and the investment has performed fairly well considering the volatile markets that we've seen over the last 2 years. So what percent is Fundrise and Sweater as part of my overall net worth? Let's break it down here. So Fundrise, currently, if you include the IPO, the internet public offering amount of the Fundrise investment that I have, again, owning Fundrise, the company itself, I do own a part of them. Overall, it's almost about $30,000. So the overall percent that they are is around 1.5 to 1.7% of the overall net worth that I actually have. So a very small amount, get under 2%, we'll call it. And then when it comes to Sweater, the private equity investment that I have that I do every single month, right now actually only represents just under a quarter of my overall net worth. So a quarter, not 25%. I meant a quarter of a percent. So literally zero, less than 1%. So 0.2, 0.25% of the overall net worth. So combined, even with Fundrise and Sweater combined, I'm at just about a little less than 2% of the overall net worth is my investment in these two alternative assets. So what am I comfortable with? I'm comfortable with going up to 5% of this combined. Again, when you think of 100%, only 5% I would be comfortable with being dedicated to these alternative assets, with the majority into dividend stocks and ETFs. Maybe my personal residence is part of my net worth, but I'm holding a lot of cash right now as my wife and I have been heavily saving for a down payment. I'm comfortable up to 5% with Fundrise and Sweater. So how much am I investing into these two alternative asset classes every single month? Well, to break it down very easy, and this is all based on income, expense, budget. As you guys know, I will be breaking down a budget video for you guys in the near future. I'm trying to figure out the best way to put that together without boring you guys and going into too much detail. I want to make it, that one easy to understand, maybe easy to hopefully copy, and you could adopt some of that. But my wife and I do save a minimum 60% of our monthly, income that we come in. Usually it's actually a lot higher. Sometimes we hit, again, that 70 to 80% threshold on our savings rate. Benefited from a low cost mortgage from a house that I bought, 12 or so years ago. And, the fixed cost of living where we currently are is very low. So we do benefit heavily from that. As soon as we move, that rate may change dramatically. So right now we're definitely benefiting from having such a high savings rate, which allows these, all investments, not just the investment into Fundrise and Sweater. How much, right? So we actually invest here in our Lanny household here, $250 per month into Fundrise. We've been doing that for about 1.5 years plus now, and it's been going well. We're not changing it yet as of right now. And in fact, we did have an opportunity to do more into the internet public offering on Fundrise, but we didn't do as much as what we were allowed to do, simply because I didn't want a large component of my net worth to be kind of maintained into owning Fundrise, the company itself. But $250 every single month, just building this alternative asset real estate class on the balance sheet. And again, it provides me anywhere from a 5 to a 7.5% yield on that investment, just depending on what stage of the investment that they're in. Then I invest $50 per month into Sweater, and we've been doing that for, again, about 1 year or so. Plus we did a one-time investment in the very beginning, but $50 every single month. So you're looking at a whopping $600 a year. So we've been doing that. No changes to do that. Similarly, we had an opportunity to invest into Sweater Inc., the company itself, similar to Fundrise, but we decided to sit this one out simply because in our house, we felt like we just didn't know enough about Sweater yet since it's been such a new investment, whereas Fundrise, we've had it for 4.5 years and we felt a little bit more comfortable owning Fundrise, the company itself. But to break it down, Fundrise $250, Sweater $50, and even $300 a month or $3,600 per year is what we are, estimated to invest into these two alternative asset classes. So in summary on my side here, again, comfortable up to 5%. Right now it's sitting under 2% of my overall net worth. Doing $300 total dollars per month into Fundrise and Sweater, $250 Fundrise, $50 into Sweater investments. Been doing it again for years on the Fundrise, about a year plus within Sweater. Doing it to get exposure outside of the stock market, because I would hate for a whole net worth just to be dictated by what the equities do, what the S&P 500 does, what individual stock happens, if they do well, don't do well. So we wanted to get a little bit of exposure outside of that. But the question is when should you consider doing these alternative investments? And I have just a few, thoughts, suggestions. Maybe when you build your first $100,000, which we all know how hard it is to get to that first 100K. If you use a 5% max threshold, that's $5,000. 5% of 100,000, probably not going to make or break if something goes sour on the alternative investment. So I would, one way would be to wait till you're at 100K net worth. Second, up to you, right? However you feel comfortable. 100,000 may be too less. Maybe you want to wait till you're 250K or 500K of net worth before you start dabbling into it. Maybe it's an income goal. So maybe you want to hit 10,000 in forward passive income from dividend stocks and ETFs. So wait till you hit that threshold and then do it. Lastly, maybe it's a part of your personal financial plan that no matter what, even at zero net worth, you want to do 5% of your savings. So if you make, we'll call it $5,000 a month, you save 50%. We'll keep it very easy. You make $2,500 in savings a month. Maybe you want to allocate, $100 out of that every single month just to make sure you get a piece, and everything else goes into your other, emergencies, stock market. Maybe you have a vacation fund and you just at least allocate, $100 to $150, earmarked to these alternative investments. And you just do that, whether you're just starting out or you're well into your personal finance journey. So that's a few methods. One, being at 100K and then building that up to 5%. Two, personal choice. Maybe it's an income level you want to be at, or maybe it's a higher net worth at 250 or 500,000. Again, talking big numbers here. Or three, maybe you just want to start right out the gate. You don't want to start with $5,000, but instead you're okay with $100 every month if you're able to save $2,000 to $2,500 a month. So that's just like 3 recommendations or suggestions for you to start building alternative assets. So my question right now then is what do you think about these 2 alternative assets? Do you own, Fundrise? Are you contributing to a Fundrise or real estate platform? Do you already invest into Sweater? Let me know in those comments below. Do you have other asset classes that you're investing into that isn't specifically owning physical real estate, that isn't Fundrise, that isn't Sweater, that isn't the stock market? What else are you investing into? Let me know below. Oh yeah, what do you guys think of these 2 PSA 10s right here? Do you guys own any cards or any other collectibles that you enjoy? Let me know below. Don't forget to like this video, subscribe to the channel, guys, so you don't miss a beat from your boy Lanny. That was Freedom Finance, and I will catch you on the next one.